What up, y'all? It's your boy Degenerate coming at ya July 23rd, 2019. It's a Tuesday. Today, I want to talk to y'all about Bitcoin price action and my outlook of the charts, possible rebound areas, and I'll dive in more to mutual funds. And I think that's going to be it today that I plan on talking about, unless I start talking about something else. And in that case, I hope you benefit from it, because your time's important and you don't want to waste it. So I'm looking at the 12-hour charts here. This is a volume profile on the right. I don't know if I've ever talked about this, but this is essentially where, like, volume, but based off of where price has been traded at. So here we see volume in relation to a period, but this profile tells you for the visible range, this is the distribution of volume. So we see that, above 12.2, we have a lot less volume than compared to 11.9 to like 10.4. The darker black and gray is the meat of the volume profile. In other words, that is the most concentrated area of volume that is on the chart. And if I scroll back and include more data, you'll notice that changes because it's taking in more information from behind. This helps me to understand where bids have been placed for, like, where's their liquidity. You also have a little bit more strategic concepts where probabilities get involved. But if price enters back into a value area, and again, it's subjective because what value area are you looking at? Are you looking at this one? Are you looking at that one? But once price is in a value area, if it's in there for 2 whole periods, or whatever chart you're looking at, it should go all the way down to the other side of the value area. So if you're looking to play a range and you're trying to get along and price just came into the value area, you're like, man, shit, I need to get into this. You might be able to long it up to there. Doesn't always happen, but probabilities are in your favor. That said, I don't think this is one of those times. If this breaks past 10.4, I'd like to know. But until I see that, I don't see some hope. This moving average, I have a 200-day moving average on the chart, 200-period moving average rather. So with the 12-hour charts, it's like a 100-day moving average. But I have a 200-period moving average as like as a last line of defense. I don't want to be the first person to catch a falling knife. I don't. I care about protecting against my risk of failure. And it's okay for me to be ambitious, but I can't get attached to the results. And if I'm gonna be ambitious and not attached to the results, I'm not gonna be wasting capital trying to catch every bounce. I just want to catch the good bounces. And 200-day moving average, 200 period moving averages, from what I've seen, tend to be stronger. They tend to bounce farther. They actually tend to bounce more times than not compared to a 25-day moving average or a 50 period moving average, 100 period moving average even. There's more weight to the 200 period moving average in my experience of looking at charts. So looking at this, price is currently where it rebounded back at the beginning of July. This is the monthly open pretty much. No, it's not the monthly open. Shit. Damn. Monthly open was back at 10.7. You had two aggressive 13. You had an aggressive 13 down in April. And then you had another aggressive 13 come up here. I wouldn't see why we won't retest the 8,500 area, personally. The 200-day or the 200 period for 12-hour candles is the 8460 area, and that's where the monthly open is. And you have a volume profile right here, like, you know, there's a lot of bids placed around this 8,000 level. I'm not saying that price is gonna be there, but when you see price there, I would buy it. Like, if it got there in 2 minutes from now, I would buy it. And if it dripped all the way down there, and it didn't get down there for another 6 days, and it was like the 29th, I would still buy it. Because that's an area that's likely to bounce. When I look at candles, I see nothing bullish about right here besides it bouncing on July 2nd here. But other than that, and this other hiccup, the past week, I don't see why there would be a lot of liquidity in this area. And I'm looking for liquidity before bounce. So if I saw this come down and I saw more volume come in as it was coming up than it was going down, like if I saw this much volume or this much volume come in right here or coming in right there as a fall, I'd be more open to buying that level. But even when I look at smaller charts, your 200 period moving average for a 4 hour is up here at like 11,000. So if you're gonna bounce, you know, it's telling you. That's where you would short. Right good old here, 11,000. If you're gonna short, sizing appropriately, do it there. But yeah, we don't have a lot of volume coming in right here. Like, it's not convincing. I do see this doji that looks like the bulls are unsure. Like the bulls can't. People are buying right here. Like that's a wick. But it's not bullish. It didn't close up here at 1061. It closed down here at like 1015. If this 4 hour closes below 98.70, I'd be even more bearish. I'm just trying to walk y'all through my thought process, and I would love to hear yours as well. I do see the argument for a bouncing here and a bouncing here, but I feel like if people were going to be longing this, if someone was buying right here or right here, or like where is your stop? Your stop loss could be either down below here at 9,000, or you could have your stop loss around here at 9,300, or you could have your stop loss here around 9,600, or it would be around right here. But for me, I always want to maximize and get my stop loss as close as possible to where I would, if I was going to be longing this right now, I would straight up, I would be like right fucking here. And because I want that risk to reward ratio, like if you want a 3-to-1, it just has to hit 10-4. Fine. If you're trying to do 4.5, that's a little bit, you're looking at like 10-6. Still, you know, the 200 period moving average on the 4 hour is telling you that's still okay. It is still technically in this range between there and like, it's not even a range. If it were to bounce here though, you could have a range like right there. Or you could even move this up like right there. That's a little bit more of convincing of a range. But again, I don't see the bounce enough to take the risk at the moment. So let's talk about the trades that I do want to take. I was looking at the 3-day yesterday when I wrote this trade out, and I'm still going to take it because I wrote it out and makes sense to me still. Like, you do the work, and if you identify it, commit to it and follow it through. And for me, I have an entry at 97.20. So 97.20 right here, at the bottom of this 3-day. And I said I'm cutting it at 93.56 for some reason. I mean, shit, there's the wick, but like for real, this is gonna close today. Today is the 23rd, the 24th. Starts off a new 3-day candle. So we see even less volume at the moment coming down. Though we still do have like 11 hours left. And it's just a less than average volume. Yeah. So I don't really see it wicking down here to 93.56. I would size in a fourth of my account because 3.6% with stop loss and a buy-in is going to cost you 4% of your account. My T1 is going to be I really want it to be 10-8 and just have a 3-1. Because that seems likely. That seems a lot more likely that it would at least retest this over 3 days. But your 4.5 R is going to be up here at like 11.2, 11.3. But no, this is a 3-1 trade that I have thrown out there because if I were to see it bounce, or if I were to be shorting, I would short it right there. And it seems pretty clearly defined. You have support turned resistance, support turned resistance, down from there. So if it breaks out of there, Liddy, I'm going to sell 30% of the trade at this like 10.796. I'm just gonna call it 10.8 level, and take a 1% profit. And at 4.5 R, I'll probably sell another 30%, and then I'll trail the additional 40% wherever it goes. I didn't mention this earlier, I believe, but Backed released futures contracts for Bitcoin yesterday. Customers can test out the platform. And they are Bitcoin settled, which is crazy, because the current CME contracts are not Bitcoin settled, they are cash settled. There is no buying of Bitcoin at all on the CME market. You can go spend that money on Bitcoin, but it doesn't directly affect the supply of Bitcoin unless you're using it as a hedging tool and you're an institution. Yeah, whatever. So anyway, I'm cutting this trade. Shit, I draw this trade out and then just delete it. Yeah, cut at 9.3, T1 10.8. I'm taking the trade because it's a 3-day bounce area. The current trend, shit, this could be consolidation after a bull explosion. But this could also be the top before a larger pullback. So I'm not just going to straight up buy this shit because that's dangerous. If we are in that pitchfork, I'm going to look to buy it at the bottom of the pitchfork. The bottom of the pitchfork for real is closer to that 8,500 level. Primary indicators that support my decision, just straight up support and resistance on the 3-day candles. The RSI isn't telling me to buy it. Volume profile is not really telling me. Nothing's really telling me to buy it there other than a gut feeling and support and resistance, which I'm okay with. I'm risking 1% of my account, and if it bounces from there, Liddy. The next area that I'm looking at is Yeah, pretty much where this alert is. This 8800 level. We haven't seen this level in really in July at all. And we haven't seen it Bitcoin this cheap since beginning of June. That's not to say that just a month before that we weren't buying it at 6,000 and 5,000, but as a pullback from the top, it's almost 50% ish, like 40%. If it touches there, first touch entry, that's why I would be buying at this 8,800 level. I wouldn't buy this on a second touch or a third touch, but as a place to bounce, that looks great. So I'm gonna delete this one, and shit, I have on here written that you would enter at 8780. Because I'm always greedy on the other side of buys. Your cut, shit, 79, like straight down, way down here. I want to be safe as fuck if I'm buying that. Because if that is a bounce, let's be real, your bounce would be something like that. If this is the bottom of a consolidation, so that's an option for a trade. Again, a 3-to-1 trade. Your 4.5 trade could be up there, or you could just commit yourself to cutting this trade earlier. I said the 8,500 was a bounce level. So if I'm okay with bringing up my stop to like 8,200, well, you bet your ass you got a fucking trade right there. That's a possible trade. But I honestly, if I'm gonna be buying that, like, I'm just gonna end up buying at the 8,800 level and just trailing that up. Probably a 4-hour. And I will get stopped out, and I will hopefully enter in a couple percentage higher, or a couple percentage lower than where I got stopped out at, and follow it all the way up. But shit, I don't really know. This is, in my opinion, a solid spot to buy at. And yeah, other than that, like, a good entry is hard around this level. Like, you have everything between 8,800 to 7,400 as a possibility for a bounce. I expect it to be pretty scattered if we don't shoot right through it. And if we do shoot right through it, that's why your 200 period moving average is a safer play. I would expect there to be more bids around that area. And I'm okay with this trade right here. And it's a trade I'll take. And I think that's all I got in terms of trades. I'm waiting on I'm waiting on 87.80, and I'm waiting on 97.20. And that's where I'm going to be betting this week. And if it doesn't hit those levels, oh well, you know, I will reassess when that time comes. But I'm not too attached to the results, you know. I'm not going to just buy something because if I'm not fully convinced that it's going to be, like, it doesn't not look good, in my opinion. That's okay. I want to see a little bit more just convincing chart patterns. But, talking more about mutual funds before I end this. I bought $250, sizing in twice a month, into two different funds, so that it'll take up the entire contribution that you can have for a year into your IRA, which is $6,000 at the moment. That's going to be split between the S&P 500, the S&P 500 index fund, and the other one's going to be a U.S. large cap value fund. So far I'm down a penny. So we got some massive volatility there in traditional markets. I can't wait to see the volatility of dollar in a day. I'll be real excited about that. But that's all I got for y'all. Sorry for taking up 27 minutes of your time. I hope you learned about moving averages from this. I hope I taught you about a volume profile if you didn't learn about that. And if you have any questions, or you want to let me know your opinions, just tell me. Give me a comment, and I'll think about it. Always manage your risk and enjoy your day. Enjoy your present moment.